where does a dollar of rent go? If it doesn't all go into the fat cat landlord's pocket, as I'm telling you it doesn't, and I'm gonna prove it to you in a second here, where does a dollar in rent go? What is happening, DeRosa Insiders community? It's Matt Faircloth. Welcome to the Cash Flow Digest. Like I said, my name is Matt, and my company is the DeRosa Group, and we're a real estate company dedicated to transforming lives through real estate. We find ways to make things better, where we make money while we make things better, and we do a little bit of both. So that's what DeRosa Group's all about. If you guys want to hear more about us, just go to derosagroup.com. So guys, here's the thing. And this was like something that came up like really heavy during the pandemic because it was all that nonsense about cancel rent and everything like that. And we certainly shouldn't cancel rent. Rent's a major contribution to the economy. We should all be able to pay rent, and we should all have the privilege of paying rent and maybe have earned income that we pay our rent with, right? Or wherever you can pay your rent with, it should get paid. But beyond that, where does it go? Because there was misunderstandings that most rent, if not like all of it or whatever, went to like a fat cat landlord's pocket. Well, guess what? Most landlords are not like the monopoly guy with a monocle in his eye or anything like that. They're just folks like yours truly here that's just making a living as that is their profession as a landlord. And it is a profession. But there's a question of where does a dollar of rent go? If it doesn't all go into the fat cat landlord's pocket, as I'm telling you it doesn't, and I'm gonna prove it to you in a second here, where does a dollar in rent go? And that's something that we should discuss here on this program. And if you guys are rising landlords, it's something that you should become knowledgeable about and even talk to your investor base or talk to your network and even talk to your tenants. Maybe have the courage to talk to your tenants about this, to dispel some of the myths that are out there about where rent goes, because I think some people might be surprised to hear. So let us break it down. And even better, my man Debunking Ray has broken this thing down to be where rent goes in multiple states. Now, selfishly, DeRosa Group is active in Kentucky and North Carolina. So this breaks down the states of Kentucky and the states of North Carolina, because that's the states that we have the data on. But that's where we operate. Nabiku's also, for our lovely DeRosa Insiders community, going to post the article where he got this data, and you guys can go and pull down where does a dollar of rent go in markets that you guys are considering. But let me break it down for you guys here. Okay. So a dollar of rent in different markets. Let's take a look. And I think you guys might be surprised at some of these figures. So let's jump in. Mortgage, right? And some of you guys that are watching on DeRosa Insiders, if you guys feel so inclined as to play a game, start guessing, right? Let me hear how many pennies of rent in Kentucky versus pennies of rent in North Carolina goes. And as a matter of fact, let me pop it out here, right? 42 cents. For every dollar you get in, 42 cents of it on average goes towards your mortgage. Now, some of that, yes, some of you guys might say, wait a minute, foul ball, Matt. Some of that mortgage payment is amortizing. Yes, but a large percentage of multifamily mortgage payments do not amortize. They're interest only. A lot of multifamily, including agency debt, Fannie Mae, Freddie Mac, a lot of stuff has a long interest only period. And so, yes, some of it amortizes, not all of it does. But amortization is like a wealth hand grenade. It's like you throw it out there a long time from now and you're going to generate the benefits of it. But it's something that doesn't pay you today. It might pay you when you sell or refinance a property over time. And it also opens up a gap so that you can make improvements to your property. Maybe I'll refinance my property as it amortizes and pull out some money to do my roofs or my windows or my HVACs or something like that. That is not necessarily a shot to the bottom line to the fat cat landlord's pocket. So don't be coming at me talking about amortization and how mortgage payments are a direct landlord benefit on amortization. Most of the time, that's just paying a bank. Interestingly enough, North Carolina mortgage payments on average are more, right? The reason for that, guys, is North Carolina on average also trades higher in dollars per door, dollars per square foot, dollars per whatever versus rents. So that means that although North Carolina properties trade higher, that doesn't necessarily correlate to more dollars in rent. So a little bit more of your dollar in North Carolina goes towards your mortgage. OpEx, operating expenses. This is everything, guys. This is your overhead, a lot of the different operating factors that it takes on the properties and everything like that. So let's jump through it. 34 cents to 27 cents. It's more expensive in general OpEx. Properties in Kentucky. That's interesting. A lot of properties in Kentucky are a little more dated. North Carolina's seen a lot more development, and it's also been proven that that newer builds have a lower operating expense ratio. That's because they're newly built. They're more efficient. They have newer things like newer piping, newer electrical, less things that need to be replaced on newer construction. So maybe that's a reason why they're employee payroll. Interesting. That's probably right on top of each other. Maybe not worth talking about, but that is something to comment. Probably one of my friends. I'm going to bet that's my man Eric Platter that commented on insurance and taxes. Could be somebody else, but that's definitely something that a comptroller would say. Property taxes and insurance. Property taxes are around the same. I want to pause some right here for people that look at if you add these numbers up. I am probably 3/4 of the way in. 75 cents I've spent so far. Right? Not one of these things are profit. Mortgage, operating expenses to keep the lights on, maintenance, overhead, those kinds of things, utilities, all that kind of stuff. I haven't gotten to profit yet. And obviously they go to payroll, property taxes. Let's comment on property taxes for a second. Property taxes don't just pay the government salaries, because we can be mad about all that, but property taxes on real estate go towards something that you guys should be very happy that they're getting that money. Right? Somebody guess. I'll keep talking for 10 seconds, and you guys guess what it is. My guest is watching backstage, and he's shouting it out right now. He knows what that thing is. But property taxes are something that your tenants should be happy that you're contributing to. Right. And that's something that it betters a community. And guys, that is your local schools. Okay. Schools, a lot of schools get their revenue aside from, doing bake sales and stuff like that. They do that too. But the primary school revenue, 98% of school revenue is real estate taxes. And that is something that your tenants should be happy that your building is contributing to taxes, because to schools, because it helps pay teacher salaries and the overhead for the schools and for the people that work at the schools and everything like that. Let's talk for a second about how much $1 in rent pays to employ people. The people that work at the property, the people that work in the local town. Real estate taxes always also typically go towards maintaining roads, maintaining societal benefits, and those kinds of things you guys might have all around your properties and everything like that, and on top of schools as well. So CapEx reserves. It's important for your tenants to realize, or for people to realize in general, that I can't replace a roof or windows or HVAC out of cash flow. I have to set aside money each month of rent that I get in. I've got to put that into a reserve so that I can pay the big check to replace my roofs, my windows, my HVAC. Maybe my mortgage isn't amortizing and I can't benefit from refinancing my property and pulling that money out in the future. Maybe I've got to set money aside for future capital expenditures. And there's a CapEx reserve on average of around the same thing in both states. But it's important to note to anyone that says, cancel rent, landlords make too much money, whatever. Well, we need to, the $1 in rent also goes towards keeping the property that you have up to in good order. I can't say that all landlords do this. Bad landlords do not do this, and they just wait for the roof to need to be replaced and they just don't do it and let it leak, right? A good landlord, like the DeRosa Group, and like I demand that you listeners here become, or already are, great landlords, set money aside so you can pay to keep your properties up in great working order. Now, the bottom line, profit. Right? How much money of $1 in rent coming in? Tenant pays you $1. How much do you get to take home at the end of the day, right? Well, in Kentucky, you're lucky enough to take home 5 cents. Yay, you, high five. That means that on average, you can say, well, wait a minute. That means if I've got a unit renting at $1,000 a month, I'm only bringing home $50. That's on average. I understand that you might have probably properties that are paying you a little bit more, but on average in the state of Kentucky, it is 5 cents on the dollar of what you bring home if you're a good landlord and do everything that I said here in operating your property. And it's lucky enough to bring home 7 cents. Lucky enough in North Carolina, a few more cents, because the little changes here, little changes add up. Even with the mortgage payment being a little bit higher, North Carolina is marginally more profitable than Kentucky. It's actually 20% more profitable. So it's actually pretty cool. So there you go, guys. So when people challenge landlords about where rent goes, landlords are greedy bastards. Well, maybe some of them are, I'm sure. But the ones that are the ones that are not doing this, that are not really breaking down their income this way. And it is a good way to prove to the world that landlords are not necessarily as fat cat as the world would like to believe that they are. That there are real bills and real contributions that multifamily properties make, and they are a necessary part of society, necessary part of the economy. And here's why: because 95 cents on the dollar in Kentucky goes towards other things aside from the landlord's pocket. That's my education for the day, guys. Tell me what you guys think. Write a comment if you guys are watching this video on YouTube. If you guys are watching this video on one of the other DeRosa outlets or on Instagram or whatever it is, write me a comment, man. What do you guys think about this? Is this something that you guys are going to share with people that you guys have in your networks or anything like that? Are you guys going to toss this out to your tenants or whatever to show them, hey, listen, guess what? Rent does not always equal profit. Maybe that's something worth talking about. That's what I got for today, guys, for the quick tip on things going on in today's market. Hey guys, Matt Faircloth here. Thank you for listening again to the Cash Flow Digest. I really appreciate you guys doing that. If you guys want to hear more about what DeRosa Group has to offer, go to DeRosa Group, DeRosa Group.com, DeRosaGroup.com online. You can hear about all the great things that we offer from an educational standpoint and passive investment standpoint on our website. See you there. And if you guys want to join our online community, DeRosa Insiders on Facebook, where you can watch this program get recorded every Friday at noon Eastern, and you can come on as even a guest or ask questions on the show. We hope to see you guys on our online community, DeRosa Insiders. See you there.